Good morning, Steve here in Chicago with the morning grain comments. Well, markets yesterday rallied off their lows and continued to rally overnight. In the soybean complex, I think some new buying came in after the March soybean crush data came out higher than expected. End of March soybean oil stocks were also a little bit lower than expected. So the higher crush and lower exports suggest that soybean oil domestic demand is improving. Cash markets continue to be firm to the crushers. I think that some people feel that they crushed the beans they're crushing now on the board at higher levels and are beginning to crush new crop at higher levels to keep these crush demand numbers high. As far as the South American market is concerned, Brazil continues to have lower soybean prices to China, which could limit new export numbers. Last year, we used 500 million bushels of beans from here to the end of the year. In order to get the USDA's export number, we need to use another 500 million bushels of beans. And I think the commercials believe whether it's crush or whether it's export, we will use that amount of beans, which tightens the carryout. We also noted that we've got some beans planted out there, 4% versus 1 average, but the 7-day forecast is wet and cold across the Midwest, could delay future plantings. Rapeseed oil globally has rallied sharply, and that's because concern that the Ukraine corridor deal could be closed and reducing rapeseed oil and even sun oil that comes out of Ukraine. In the corn market, cash is strong, and we have a kind of a demand-led market from the March lows. They're slow, grinding markets that move higher versus the supply shock. That's 1 or 2 days, and then it's done. The demand for ethanol is improving with higher margins. And if we look at the Ukraine corridor being closed, China cannot get corn yet from Brazil. They can't get from Argentina, and maybe won't be able to get from Ukraine. And so that means if they need corn, if they need to buy corn, they're going to have to come buy it from the U.S. So we see the inverses spreads continue to widen, and we continue to see cash basis remain strong, which is helping support the corn futures market back to the 650 area on the July. Wheat market, I think, in general is kind of a weather market. Southern Plains is dry. The 7Z map this morning put some few showers over Kansas, maybe Nebraska, but the southwest corridor remains dry. And again, these showers are kind of hit and miss, and the USDA kept the crop ratings at 27% good to excellent, with that's a 34-year low. The only crop class that improved was soft red winter wheat. So we're still concerned about, the hard red winter wheat production numbers. Got snow and cold weather up in the northern plains. Canada's crop's going to be late, and we'll be watching Australia and the impact that El Nino might have. We also watch the corridor in wheat and see if exports out of the Black Sea are slowed down. U.S. is not competitive in the export market, but it is a weather market. We also noted yesterday that some new money came in. It seems like this money has been on the sideline, but if the Fed hits the pause button, they may be back to buying commodities.